Hello guys, and welcome to a new review video. Let's get started.
Hey guys, Sean Maloney, Digital Business Masters with Karatbars. Hope you're well. Okay, this video we're going to do a follow-up, a very interesting follow-up that we've held back for a while as we understand more about what's going on with the markets. I'm recording this in the end of March 2020. Okay, so for those of you who are relevant to this time and see what's going on at this time, for those of you listening to this in the future, you'll know this is quite an interesting point in history and economic history. There's things going on in the world that are unprecedented, and this leads us to be able to present some interesting information that is pertinent to the years of information that we've been building now around what it is to be 100% non-reliant, so 100% independent from bosses, banks, and governments. So for those of you who've not seen the video I did back in 2018, this is a screen grab about here. I'll pop the link below this video, and you can watch what we were talking about back then with regards to the reasons why it's very important for you to accumulate gold. As you can see, the title there was Why Buy Gold in 2018 and Beyond. Now, what we were talking about there was the effects of something that happened prior to that point in time in 2018. We were focused on the effects of what happened in the economy after 2008. Okay, so we were looking at various factors and we were making some suppositions and building up a case for why it might be sensible for people to remove themselves in some way from 100% reliance on the fiat system, in other words, bosses, banks and governments, and start to take some responsibility and sovereignty for their own financial future. And one of the ways that we advocate that should be done is through the ownership of physical gold. Okay, physical gold, not ETFs, not certificates, not contracts. You know, we're not interested in spot price gold. We're interested in physical gold. So we were talking about that, and you can watch that video, Elijah, and you can see what we were talking about and how prophetic it was in terms of where we are today. Because what we can now start to talk about is this premise that we can still refer back to the baseline 2008, which I'll be doing on this video. And we can still talk about the reasons why this price hike happened in gold. If you go backwards all the way back to the year 2000, back to 1990, you'll see there's very, very little movement in gold for all sorts of reasons, particularly since 1971. But why did this happen? Why was there a significant spike in gold price between 2008 and 2011? Well, obviously there was more demand and supply. Yeah, the gold markets work like any other markets in terms of when there's more demand than supply, the price goes up, and vice versa. So that explained that very, very straightforward. And what I also touched on back in 2018 was what we understood at that point. This blue box here represents the period of time that we've had in the global economies under something called quantitative easing. Okay, so quantitative easing is the fancy description they gave into the markets for basically the printing of extra currency into the market against bonds and against asset purchases. Okay, now this has become normalized in the economy as you'd expect, and it's not stopped. In fact, as I speak to you in March 2008 and 20, there's a huge amount more quantitative easing going on in terms of asset purchase by the central banks against government bonds, etc., than ever before. So what we're dealing with now, as I think I may have referred to in the 2018 video, is a much, much higher level of money printing, or more pertinently, currency printing, than we even saw after the 2008 Great Depression, as they called it. Okay, and the effects of that quantitative easing over the period of time from when we saw gold peak back in 2011-12 to where we are just recently, the effect of that money supply into the system meant you basically ended up with stock market bubbles. Okay, so the Obama bubble all through that period, and more recently the Trump bubble. Okay, and what's happened just recently is the bubble has burst, quite literally. Now, clearly, The coronavirus, that is the main headline at the moment, is a big part of that because, quite rightly, governments have had to take measures to protect the populations, and that's fine. But the direct effect of that is a complete devaluation of the stock markets and a complete devaluation of the economy, full stop. Okay, so the only thing they can do now to remedy it is what they're doing right now, which is airdropping currency into society to keep the employed and keep the unemployed and keep the self-employed actually in in food, quite literally. They're keeping them in a state of income. It's universal credit that's been now created suddenly by governments to make sure populations are looked after, which, is something that needs to be done. We can't have people going destitute. However, the fact that this was all something that was inevitable anyway is the real problem. Okay, there was always going to come a time, we call these things black swan events. There was always going to come a time when there was going to be a complete collapse in terms of what the macroeconomy constitutes, and the way that manifests is in things like the stock market and property markets and all these inflated bubbles. People call it the everything bubble. Okay, it's not quite the everything bubble. There are things that are very much and always have held their right position in terms of value, but most things now are completely inflated and have just deflated. Okay, so what we're interested in here is the experiment that was quantitative easing took its course. Okay, but even before, this is what we were watching, even before the coronavirus kicked in early 2020, you saw gold start to break through in terms of its value. And that is exactly the same as what happened back in 2005, just this very small section here on this chart. From 2005 up until the end of 2007 into 2008, then you saw this breakthrough in gold. Now that's basically because the smart money moves, okay, and it moves first. So what's happening here is the smart money is moving first. So if you liken that, just little spike, it's quite a big spike actually. Gold's never been more valuable in fiat terms. If you liken that to just this period of time here, then you can start to realize what it is to position yourself ahead of a possible break out in gold again. So what we're doing here is we're looking at history. We know history doesn't repeat itself, but we do know that history rhymes. And what it is for you to educate yourself. In other words, do what the rich do. That's the trick. Don't do what they say. And get yourself ahead of these wealth transfers. And this is basically wealth transfer. Okay, so this is what we're in the middle of right now. And it's a case of understanding that perspective so that you can start to do something about it. So I recorded the video below in 2018, just where this arrow's pointing around here. You can just see, if you can see on the video, where we were just coming down off an air. It's a different scale on the chart, obviously, but we were just working in about this area here. And we were talking about how various factors, as we call them, I've got some listed here, have influence and allow us to take judgment on what may come. And everything that we were talking about back then actually has come to pass just 2 years later. And now, though, we'd have much more than what I was referring to 2 years ago in terms of factors. I was talking about QE and interest rates and trade wars and the impending LIBOR reset in 2021. We went into some detail about that. I touched on hyperbubbles and properties, etc. But the difference now is that we have a much bigger issue when it comes to the central and government bank policies that are now bringing in emergency measures that mean that we're deflecting unemployment and other issues such as the collapse of the dollar and the fiat reset. It's all being deflected through the printing of money. In fact, they're now having a policy of unlimited QE. Okay, so it's a completely different world than even it was at the end of 2019, and we're dealing now with a huge number of unknowns. The main one at the moment being the longevity of the coronavirus, but even getting over this next 6 to 12 months in the way that they have to do, There's emergency measures in place around the Western world now and coming to other parts of the world where they just simply have to do what they have to do to keep society on a level. But that now is the reason for doing it. It's no longer a case of holding stock markets up and making sure that the people who are vested in those stock markets get their payments in pension funds, for example. At least 60% of the average person's pension fund is inside public stock markets. The other 40% are often in bonds. Both of those things are under now incredible pressure. But this isn't even about that. This isn't even about making sure that people who have worked all their lives can draw down on what they think are safe pensions, safe annuities, safe savings plans. It's not even about that. This is now also about making sure that people who are working are able to be protected. So it's a much, much bigger issue now. And it leads to an effect because we're now, frankly, we're paying back already some of the challenges of the initial QE experiments going back to 2011. This was a direct result of the crash of 2008. And now we've just laid a whole load more debt on top of that particular responsibility that's now going to live with the world for the next 10, 15, 20 years. So it's a big issue. And it's a case of understanding that whatever the governments and the banks do, they're now unable to be able to fix this with current fiscal policy. The next thing that will happen between now and going through to 2023 is you'll find unemployment and taxation, all sorts of things like this go on the rise. And the governments and banks will have no choice but to try and fund their way out of it. But the affordability of all that will become unsustainable. And it's very, very likely now that we'll end up with some form of fiat reset. Now, the question for people listening to this video is, whatever you make of all this, is for you to take a good look at that statement and then get out there and make it your business to understand whether you're just going to let this ride over you and take what comes, or whether you're going to get the very simple and free, by the way, education that's available widely across the internet and do something about it. Now, what could one scenario be that allowed you to actually do something about this? Well, this is where it gets interesting, because no longer in life are we beholden and having to be 100% reliant on bosses, banks and governments. There are some now very, very powerful educations and techniques that allow everyday people to take control. And one of the books we always refer back to give you the foundation of awareness on this is a book called The Cash Flow Quadrant by Robert Kiyosaki. It's a book you should read quickly. If you're listening to this during this period of shutdown, which will be with us now likely for a good few more weeks yet, then this is the time to go and learn what it is to move right on the cash flow quadrant. Now, Robert Kiyosaki does a great job of explaining why you should do it, but he doesn't do such a great job of explaining what you can do to take action. So we've taken it on ourselves at DBM and our sister groups, as well as the platform, our preferred platform, the vehicle we call it, Karatbars. We've taken it on ourselves to get out there in the world and actually give people a vehicle on which they can apply the education from the cash flow quadrant. And it basically means you moving yourself right into a position whereby you have access to residual income and passive income. It's only right that you should remain in place with regards to your employed status and your self-employed status. We're not saying there's anything wrong with that. People need to contribute to society. When taxes need to be paid, we need to make sure that we're looking after each other. You know, my wife's a nurse, and she will continue to be so because that's in her makeup. That's what she does. She looks after people. I'm not saying there's anything wrong with being employed or self-employed. What I'm saying is to also have an ability for you to create financial sovereignty through a business system and the ability to understand what it is to have money working for you. So what does money working for you mean, and what does it look like, or what could it look like? Well, we can simply see it demonstrated in what happens to the price of gold. It's a spot gold price. I'm working on spot gold prices here, but it reflects on physical as well. Physical, you pay a higher price because it's premium, but obviously you get a better price back because it's physical rather than just contracts or derivatives. It's something everybody can get involved with. To own physical gold is not difficult in this day and age, especially through platforms like Karatbars. But if we just look at some of the numbers, very simple numbers, over the past 12 years, since 2008, we can just track the price of gold. So the green star here is back in 2008, January 2008. There was a price per gram of gold of 19 euros per gram. We then saw, and this is what I was explaining in the video from 2018, the reasons why that spiked. It's actually exactly the same reasons why it's spiking now. Trick is to get in front of it. So if you were fortunate enough to have accumulated gold back from 2005, 2008, then you will have seen a significant reward for your awareness. In fact, 182% reward, because gold in 2011-12 went up to 44 euros a gram. Now, because of QE and because people decided to take advantage of very, very cheap money that was being given to them through the printing presses of the central banks, they took it on themselves to remove gold from their sites and start to pump their investments into the stock markets. That's when you saw gold basically flatline for a good 10 years. Okay, which is, part of it. It's what it is. But gold, remember, is not just about an investment. It's not about necessarily making a return. It's about protecting what you've already got. It's putting your energy today into a time capsule. It's wealth security is gold's main job. Money should do 5 things, and the 5th thing it needs to do is to protect your future purchasing power. And you can see gold doing that very, very well here in terms of holding its price despite huge experimentation with fiscal policy. Now, but even that fiscal policy becomes eventually untenable, which is why you see this spike here. So 2018, when I recorded the video below, I was making these points out, and at that point it had come down from its peak at that level back to about 34 euros a gram. Okay. However, as we sit today, because of all these other factors now taking place, so all the factors that were relevant in 2018 and now a whole raft more, because of these all coming into play, we've started to see the breakout, despite the freedom the banks and central governments have of printing money into society, full fiat system experimentation. As I said earlier, this is equivalent to 2005, 2008. This is 2019, 2020, and now we expect gold to break out again. So to be involved with gold immediately is a great way for you to take your place as an ordinary person inside what it is to create passive income from assets you own. And that is the main premise of Karatbars that a lot of people don't fully understand. But I'm hoping with this video that you see what it is to get yourself ahead of factors that are totally out of your control. There are literally millions of people all over the world right now, employed, self-employed, unemployed, and retired. Literally millions of people who are completely in the hands of bosses, banks, and governments, 100%. Despite the Western societies all expounding democracy and what it is to be free and what it is to have your own life and what it is to be able to create, the dream, despite all that, the vast majority of people, as I record this video, are 100% reliant on somebody else. And as I say, nothing directly wrong with society forming the way it has, nothing directly wrong with the need for government to step in. That's not what I'm saying. There's lots of people who need help when they need it. And that's what we pay our taxes for. That's what we pay our dues for when it comes to these types of scenarios. problem is the sustainability of that for any country. And that being the case, it's essential that you take some personal responsibility for what you're going to do. Now, why do we pick on gold? What's so special about gold? Well, I'll leave you to go and do your research on that. There's another video you'll find below this video from a gentleman called Mike Maloney. It's called The Hidden Secrets of Money. And he does a much better job than I'm able to do of explaining exactly why gold always has a place in protection of people and always will. It's the ignorance, financial ignorance, that's become incredibly expensive for the average person. Financial education is completely free this day and age. And this financial education, frankly, should be given at schools. But for reasons I won't go into right now, it's not. So now is the time for you to listen to this very carefully and decide what you're going to do from this point onwards. To educate yourself over this next few weeks, and that's all it really takes. To bring yourself into communities that don't just talk about this, but we've done it. To bring yourself into communities whereby we help each other. I call this teaching people to fish. We don't give people fish. We help you to help yourself, and then you can help others. It's a much, much better way for society to operate, and it means that everybody is able to build a foundation under themselves that is completely devoid of counterparty risk. You cannot say that about the house you live in, about the assets you own, if they're based on fiat, and about stock market or savings plans that you might have. They are all open to counterparty risk. Gold is a very special phenomenon that has zero counterparty risk because it's in limited supply and it's always in demand. It's as simple as that. Okay, so we overlay this, we have a look at where we are today, and then we can start to make conjecture. Okay, so I'll finish with a very simple conjecture, which is exactly what I did back in 2018 when I was talking about the rise from 2008 to 2012, and we can make the same types of conjecture, because if all these factors come into play, then would there be any reason why we wouldn't see a similar increase between 2020 and 2023 than we did from 2008 to 2011? Is there any reason why that wouldn't happen? And even if it was only half that or a quarter that, would it still be a good idea to own gold at this point? Probably. It's purely perception management that's meaning that you see this as strange, and I appreciate lots of people still do. Even very, very successful people that I speak to, they still can't get their arms around why they should own physical gold. It's wealth security in its first instance, and then it becomes something that you can create passive income from. For those of you more aware of what's going on with the wider fiscal economies and the macro economies, and you're keeping your ear to the ground with government policy and what's coming through with big business, then you'll also be aware of a phenomenon called the blockchain. This is equally powerful, and it's equally been adopted under the Karatbars vehicle, which gives us both churches. Very, very important. Where, however fiat shakes out, it's very, very likely it will either be caught by gold or blockchain, or more probably both. So if you have positioned yourself in both gold and blockchain technology, then you have an even stronger case in terms of your financial sovereignty, which is exactly why we do what we do with Karatbars. And it's all based on this type of thinking, this type of knowledge, this type of awareness. Ultimately, it comes down to you working to understand that, getting all the free information we provide. There'll be links below where you can have that information for free. There's no obligation. It's all about information. It's not about working in a program to sell product. It's about information and education. So put yourself in a point of awareness and informed decision making. If you do nothing other than take that information, you are welcome to it. But as you'll learn, if you read books like The Cash Flow Quadrant and listen to people like Mike Maloney, then you'll learn it's not just about having the knowledge, it's about applied knowledge. So you have to take action on what it is you learn from people like ourselves at Digital Business Masters and all the other colleagues. There's up to 1 million people in this project right now that are all out there trying to help people genuinely. Okay, so take that as it's meant. Watch the information with all this video. Speak to whoever brought you to this video. I'll be more than happy to help you to take action on the learning. And I wish you the very, very best of luck as we go through the rest of 2020 and into what doesn't have to be an unsure future if you're taking financial sovereignty and responsibility for your own financial destiny. In fact, to be quite the opposite, it can be incredibly exciting to be in control rather than being 100% reliant on bosses, banks, and governments. With that, guys, I'll leave you. Appreciate your time, and I'll see you on the next video.
Thanks for watching our video. I hope you got a lot from it, and I hope to see you soon.